Billionaire hedge fund manager Bill Ackman has been aggressively buying Alphabet stock this year, making it over a $1.3 billion position. This is for Pershing Square, his investment vehicle that has significantly outperformed the S&P 500 over its various different lifetimes. Despite Bill Ackman's occasional blow-up, I do like to follow him because he does run a concentrated portfolio, and sometimes the positions that he calls out is very interesting. So in this video, I'm going to walk you through his bull case for Alphabet stock, as well as my own personal thoughts towards the end of this video. If you enjoy educational investment videos, please make a point of hitting that thumbs up, hit that subscribe button. You're watching Unrivaled Investing. So let's dive into understanding what is going on with Alphabet stock, particularly Bill Ackman's bull case for Alphabet. It's interesting to note that in his letter that just came out in the last week or so, he calls out how even though the stock is up around 40% year to date, he still views it as an opportunity because of their future earnings growth and potential multiple expansion over time. So he still sees significant upside potential. Why? What are the key bull arguments? Well, partly because their search market share really hasn't shown any signs of disruption, despite the concerns that maybe Bing could disrupt them and, Microsoft could go after their core search market. So far year to date, and so far looking back over several years, Google has had a very stable market share position, around 85% of all search market. And then you look at this online search, and then you look at their YouTube business. YouTube continues to take market share in terms of the streaming battle, and it's also a compelling source for ad spend, looking at both search and YouTube as being key properties that will continue to win digital ad spend market share over time as well. He also likes that you look at the cloud market, and it's effectively an oligopoly split between Amazon, Microsoft, and Google and Microsoft continue to take market share. Amazon's been fairly stable, and he views that this is a source of potential margin expansion over time as Google continues to grow. He also, and this is a key aspect that I think a lot of investors should reflect on, which is that Google does have a distribution advantage. He calls out how they have 15 products that serve more than 500 million users and 6 products that serve over 2 billion daily users. This is very relevant because even if someone comes out with a revolutionary new product, because Google already has users that have this sort of habit of using their products, whether or not it's Gmail or Google Photos or Search or YouTube, people that are using it on a daily basis, it's less likely for them to get disrupted because they already have this distribution. So they could see someone, oh my goodness, someone's quickly taking market share, someone has this revolutionary product, they can quickly clone that, roll it out, distribute it to their audience of billions of users. And so it's much harder to get disrupted when you already have that relationship with the end customers versus someone else that comes out with a revolutionary product. They're going to not only have to come up with the product that's better than Google, they're also going to have to reach out to all the users to let them know, like, hey, by the way, we have something better. And that is inherently difficult to do. Microsoft's obviously trying to do it with Bing and search, but so far, little change. Another key aspect that the bull thesis from Bill Ackman is he likes their position with AI, artificial intelligence. He believes that AI integration is going to improve the conversion on ad and increase advertiser return on investment and monetization. So this is not only search, this is for YouTube as well. He also likes Google's AI optimized infrastructure in their cloud segment, and he views it as a key competitive differentiator as more than 70% of generative AI startup unicorns are Google Cloud customers today. So he really does view Google as an AI play. I agree with him, but I also view the AI environment as inherently uncertain. He also loves Google's balance sheet and cash flow. I do too. He talks about their extremely strong balance sheet, how they have net cash of around 6% of their current market cap, and that they're buying back 4% of their shares each year. So Google is in a very strong position with lots of free cash flow. But the question is, okay, so what happens to Google from here? What are my additional thoughts? First of all, in full disclosure, this is not financial advice. I do own a little bit of Alphabet stock. A few stocks have dropped significantly recently, creating what I believe are potentially attractive opportunities. So if you're looking to take charge of your investment journey with compelling ideas, market insights, and an exclusive Discord community available for annual subscribers, come check it out. That's unrivaledinvesting.com. I also have educational materials if you want to learn how to read financial statements or value stocks, also at unrivaledinvesting.com. So I'm looking at Alphabet, and I think I agree with a lot of what Bill Ackman has to say. For example, with YouTube, I think they're in a fantastic position because I think generative AI, a lot of the pictures I'm using in this video are AI created. And I think, honestly, they're really cool. It took me, a couple of seconds to create this, and this looks amazing. A computer working on creating a video, and it's only going to get better, and it's only going to get lower cost. And so I view the creative industry as likely to get disrupted. I view the legacy content producers as facing greater risk. And so a platform like YouTube is in a great position. And keep in mind, this is just one of Google's assets. The search market, if that gets disrupted and YouTube wins, that could be a problem for Google. So just focusing on YouTube right now, I think YouTube is in a very promising position as the cost to create content will keep going down and people will continue to get impressed with what they can find. I mean, just like how people, 20 years ago, people didn't tune into, YouTube to learn about companies. If you turned in, when I was a kid growing up, it was Wall Street Week, Louis Rukeyser, and this is Louis Rukeyser. Terrible impression. But the point is that the level of analysis that you can now get on YouTube is significantly better, in my opinion, than what you got with Wall Street Week, 30, 40 years ago. And so the chat, and I think that trend is just going to continue, no matter what topic you're interested in. So this is a great position for, Alphabet, for Google, this core asset. But I think another key aspect, and this is something that some folks might be overlooking, is that the recession potential impact, from higher interest rates that we've seen this past year. Huge surge in interest rates. Now, getting around 5% on your cash. That hasn't really impacted the economy yet. And so if you do see a recession, a lot of people were expecting it. I myself was expecting it. Looks like maybe it gets punted a few months out. If it does happen, I don't think you've seen that in Google's results yet. In which case you could get, some pressure on Google stock if you start seeing, revenue take a hit. So despite And to that point, despite, the bull thesis, Bill Ackman himself is aware of the potential impact of higher interest rates on stocks. Recently he's called out, oh yeah, I do have these sort of concentrated bets on companies I like Alphabet. And he's, Alphabet's been the position that he's been aggressively buying. But he's also short in size the 30-year U.S. Treasuries, and it's a hedge against the impact on the long-term rates on stocks. In other words, stocks could take a hit if interest rates continue to move higher, and partly because, the U.S. is in a tricky position with, deficits as far as the eye can see, and politicians that don't know how to, treat budget deficits seriously, and, interest rates that are still arguably pretty low. I mean, it's interesting to see, the short-term cash yielding more than, you can get on 20 or 30 years. So something's going to level out over time. And so it makes sense for Bill Ackman to say, hey, I expect higher rates in the future. I actually discussed this in greater detail in my most recent weekly letter for my subscribers at Unrivaled Investing. So this is a really important point that even if he's right, he might also win with a hedge. So maybe Google stock, pulls back, but he wins with a hedge on higher interest rates. I also think it's worth understanding that the environment with AI is going to be transformative. I mean, recently, one of the former co-founders of DeepMind, which I believe was acquired by Google, he's created his own AI initiatives. And, one example of an AI initiative is, I think it's called Inflection, where they have the Pi AI, which is designed to be a supportive, smart, and there for you anytime AI, very much like the movie Her with Joaquin Phoenix, which I thoroughly enjoyed. And so I look at this and I think we are in just a transformative world where the world of Her, if you haven't seen the movie with Joaquin Phoenix, I recommend it just because it gives you a glance of, I think, where we're going. There was another movie like that where a guy created a digital actress, and that was with I forget his name. He was the guy with from Godfather, Al Pacino, and that was another example of, I think, a direction that society's going, where you're going to have artificially intelligence created content that's just mind blowing, and the cost of creating it's going lower and lower. And I think the reason why this is relevant with Pi in particular is that if people's relationship with their devices, with the internet, changes from I'm going to Google that to I'm going to talk to this very personalized assistant Could that disrupt Google over time? And so far, the sign is it's too early. Google is just crushing it. But the combination of, hey, could you get a recession? And B, could you get really some weird transformative stuff happening in the quarters and years ahead? I do think you will see something that's just mind-blowing, where you go, more and more people are going to be having relationships with AI and things like that. I think you're going to see that type of development, talking, having a very intimate personal assistant. So I think you're going to see that. And how that impacts Google, it's unclear. Google is clearly, a contender where they're going to be launching Gemini, which is supposed to be transformative later this year. But it's just, there's a lot of moving pieces here. I look at Google looking at a hypothetical valuation framework. Keep in mind, stock price can go way higher or way lower. I agree with a lot of what he's, talking about, which is that even after a 40% run up, there still is, very reasonable return. I own Google in very small size. There are other things that I think have more potential, more attractive upside potential that I own, that I've been recently buying. But I still look at this and I think, there's a good chance you're getting an attractive cash yield. And there's a good chance that he's right, that you do get earnings growth and multiple expansion, and maybe you get, 100, 150% upside over the next 5 years just based on that. So I do look at Alphabet, and I agree with a large extent to what Bill Ackman's saying, but I also look at what he's doing and see that he's hedging a bit with, a large bet against treasuries, saying, hey, interest rates have moved higher. That could cause all stocks to come lower. So I'm in large agreement with a lot of what he's talking about here, that Alphabet is very compelling. It does have a lot of AI features that are worthwhile. It does have a distribution advantage. I'm personally a little more cautious on how AI will impact their business long-term, 5-10 years from now. A little bit more cautious there. But, I welcome your thoughts in the comments below. If you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching Unrivaled Investing.